Mortgage update, and my name is Sean Rowland, in case you guys are brand new here. And I'm going to go over kind of what happened last week and what we can expect for the future for this week. Some of the big items that are going to happen this week and what it means for our customers that are shopping for homes. And let's take it away. All right, so first off, always 9 days until Christmas. So I've already said that a few times, but I can't believe it's still only 9 days away from Christmas and still no snow in the mountains, really. It's been really dry, but this is what I want for Christmas. All I want for Christmas is lower interest rates. So we are going to see that. The Feds most likely are going to be cutting rates this December. So they're going to most likely just do it by a quarter. So I'll go over that in just a little bit as well. But here's what happened this last week. So we had a pretty dramatic drop in the value of mortgage-backed securities. So if you saw last week, it was just a bad week. We had an couple alert to locks here. So we locked our pipeline early, and then we lost like 75 basis points, maybe even more. It was 160 down to in the 98, 99 and change. So we lost 100.93 and below. So we lost probably a quarter in interest rate at least last week. People say, well, what happened? What happened? I thought, this 1 month the Feds are going to cut interest rates. And yes, they are. But keep in mind, the Fed funds rate does not affect mortgage-backed securities. Inflation is the culprit. Inflation is one of the biggest movers of mortgage rates. High inflation erodes the value of money long term. So high inflation hurts interest rates really badly. So what happened with the overall inflation this week, you may ask? Well, it wasn't good. But last week we saw the 10-year scream upward as well. So it was just a bad week for interest rates. Today we're flat. We're really haven't done much of anything this week so far today. We are, if I can get this thing to work, there we go. We are really flat. So if you see on the green section down here, that's where we are today. That was last week, Friday, Thursday, Wednesday, Tuesday, Monday. It was just boom, just a bad week. So I locked in everything at the beginning, and we hopefully will continue to see rates flatten out, but it was a bad week overall. So here's where we are with interest rates right now. We're still sub 7% if you're perfect. Again, I always want to reiterate that. These graphs, when you go online, are if you have 30% down or more, if you have a 780 credit score or better, and your single-family detached home primary residence, all of the boxes checked, and you will be right around that 6.95 on interest rate. So rates are about a quarter higher, and we were excited to see rates kind of come down a little bit. I did lock a few at the 6.625 rate, which was nice, but we are kind of pushing higher now. So that's not a good thing, but let's see what's going to happen this week as far as the overall markets are going. So we had the Empire, the manufacturing index, which has not been strong. It's been relatively weak, but that was today. Tuesday, we have retail sales. We have industrial production. We've got some housing numbers and some bond auctions happening. Those are the big things on Tuesday. With housing starts and building permits, typically this time of the year, they're a little slower. And then we have the Fed's economic projections, and then Fed Chair Powell speaking on Wednesday. So that's going to be an interesting day to see kind of what happens there. On Thursday, we have the Bank of England, of Japan, and then we have initial jobless claims. So remember, jobless claims, continuing jobless claims, those are things that can really help the bond market if the jobless claims are higher. If the employment picture is bad, that does help mortgage rates. So we're actually going to hope for a little weakness there. I'll kind of go over what happened this last week too. And then GDP annualized is coming out. and existing home sales. So Friday, PCE, that's the inflation numbers and the core coming out. That's this next Friday. That's going to be a big day. So again, what happened this last week? Why did rates get worse? Well, we thought they were going to get a little bit better on the heels of this information. This is the jobless claims, continuing jobless claims. That is people that have been on unemployment and continue to be on unemployment continues to rise. That means the more and more people are on long-term jobless unemployment, more and more people are staying on for longer. That's not a good sign. So if you look at the initial jobless claims, they're down because nobody's really getting fired or hired right now. It's kind of flat. And then if you look at the initial jobless claims, we're kind of right in that same picture. So continuing jobless claims is high, but the markets aren't really doing much of anything right now. So it's going to be interesting to see what happens this week on the jobless. Now, look at inflation. I hate inflation. I mean, it just makes me angry. So look at eggs, guys. This is for the November. Eggs were up 37.5%. Some actually, if you pull out a few things here, had eggs almost above 55% increase. Vegetables was in the 30% range as well. Just really, really hot inflation this last November. And again, this was for the month of November. And I don't know if you see, my son eats so many eggs that this hurts because I just bought a dozen eggs for $7.99 and it was crazy. I couldn't believe it. But anyhow, make a long story short, eggs was the biggest culprit. But other things like juices and drinks, that was 17.2%. That's high. So we had a spike in inflation. And remember, inflation is a bad thing for mortgage rates. So this was the culprit. Overall, the food at home wasn't terrible because it's only a small percentage of the overall inflation. Housing, food away from home is the biggest. It's like 46% of the inflation number is housing and food away from home, or housing away from home. So it's interesting to see that inflation is still kind of sticky. So hopefully we'll get some changes here very soon. So what I wanted to talk about today was the pre-approval process, because I know that it's a hard conversation to have with buyers to make sure they go through the full process and they commit to a lender when doing a pre-approval. It is so important to make sure it's done right. And I know that a lot of people don't want to push buyers in one direction or another to make sure they're done because they're still courting each other at that timeline already, and you don't want to be pushy. And so some real estate agents are a little bit more aggressive on making sure their buyers are fully qualified up front. Some are really loosey-goosey with it, and they make offers when they're not pre-approved yet. So I want to urge you to explain to buyers how important it is and really what goes on the pre-approval that can help set them up for success and help them with the overall offer process. So I want to go over a few things with you on that today. Oop, it's going backwards on me. So first of all, realtor coaching. I want to go over some things that we can do as in the real estate community upfront to help a buyer understand why they need to commit to a lender before making offers on properties. Now, a lot of people want to shop, which is fine. I urge you to shop around because there's some bad lenders out there and you really need to get to know the lender, their fees, etc. But it's important. It's very important to make sure that your buyers are choosing a lender before making an offer because you want that lender fully committed. Okay. So when you're shopping, it hurts you if the lender knows you're shopping around to a whole bunch of different people during the offer process. They're less likely to go all in with checking the rates to see if you're locked in at the best time, making sure that you're getting the best overall experience through the offer process, making sure your pre-approval is dialed in. Because if you're shopping, most likely buyers aren't giving me everything. They're waiting until they're under contract to get me all of the stuff. So it's important that they do get quotes ahead of time on the same day from the lenders they're shopping with before they really start committing to properties. Because one of the things that I do is when buyers are shopping, I tell them, send me all of the properties you're interested in, and I'm going to present to you what they all look like side by side. If they're shopping with different lenders, most likely they're not going to get the full service out of that lender because they're not committed. So I urge you to make sure that they're really committed up front, because it's going to be important to know what to ask for in concessions, what the payments are going to be when you make the offer, and you want a lender fully committed to do that. Make sure that they're really researching the loan officer, not just the mortgage company. A lot of people think that they say, tell the realtor, oh, I've been banking with Bank of America for 25 years. I'm a private banking I've got all these great relationships. That doesn't mean anything. We all know on this side that banks are clunky. They are. And we have a portion of our portfolio is with Waterstone Bank. And I know that if we're using those unique products, it's a bank. They're going to take a long time. We don't have full control over those. Really, there's only a few products, but they are phenomenal products. But I know it's a bank. Banks are clunky. They take a long time. So make sure they're understanding it's not just the bank or it's not the mortgage company, but it's the loan officer. Make sure they're really, really diving in deep with who that person is too, because they're the ones that controlling the helm. They're the ones driving that boat. And then make sure they understand the difference between credit unions and banks, brokers and mortgage bankers. So we want to make sure that when we're getting our buyers ready, they're doing it properly and they're committing before you start making offers, because that's when game time starts. So the pre-approval. Now, I never do mine online. Now, that's just me. I think online applications are garbage. I literally think that people don't understand how powerful the data is that they're entering into these. So I don't do online applications. I'll do them on Zoom calls, over the phone, or in person. And there's a lot more questions that I ask to make it really work. There's nothing left out. There's no average. There's no like, oh yeah, I think I make 200,000 a month when they make 100, or 200,000 a year when they make 160, or they say, yeah, I'm salaried, but they own their own company. There's all kinds of problems that happen with online applications. Do I do them? Yes, but they're not very good. So once I do the initial application, we're going to go over those results really in detail with the buyers up front so they understand everything that they're getting themselves into. And I'm not just talking about the payments. I want people to understand that when you're pre-approved, there's a maximum number you can qualify for, but there's also what that number is that's within your budget. So there's two different numbers, what their budget is and what the maximum qualification is. And a lot of lenders don't go over that. I think that's one of the most important parts of the pre-approval. So knowing this before you make an offer is incredibly important. That way, when you get an accepted contract and then they look at the numbers afterwards and they're shocked and then they get cold feet and they back out, it can waste a lot of time. So making sure they understand that. We need to make sure we're really reviewing the documentation, because buyers are buyers. They are. So making sure it's done and the proper documentation is being requested. A lot of people say, hey, send me a list of the things I'll need. And it's not that easy because everyone's different. Everyone has different documentation requirements. So it's not that simple. And when you say, hey, Sean, can you get somebody pre-qualified? It's a couple hours of intense work. It's not like you can run credit, look at it, look at their income, and just in 15 minutes get a proper pre-approval out. It takes there's a lot of work behind the scenes. And I want to make sure you know that, so that if you are shopping on weekends without a pre-approval, that we're setting the lender up for, the timelines needed. A lot of people don't understand how rates work. So I'm going to go over that in detail and how to secure a rate, and then review the different creative ways to get lower rates. I'm telling you guys right now, when people are coming to me for a pre-approval, in their mind, they're like, my budget's like $3,000 a month, and I'm looking at homes that are $600,000. Well, those don't line up. So a lot of times what I'll see is I'll hear their budget and I'll see what the homes they're looking at. And again, this is part of the pre-approval. And then I'm saying, okay, I know what you want. I know the homes you're interested in because you've been looking already. And I know your budget. They don't align. But what are some creative ways now during this pre-approval process where we can set you up so that we can ask the seller for something to get you the rate that'll keep you within the payments you want? All of this is done with a committed lender upfront if they're pre-qualified, because we need to know how to make that offer. And if their budget is less than what that home price is, even though they're qualified, they're going to have a rude awakening. So yeah, we review all of this with the presentation. I use the mortgage coach. We have 4 items side by side. So let's just say we're making an offer with no concessions and a higher price or a lower price. And then we have with concessions at a higher price. And then we have buy downs and we have temporary buy downs. And we can look at it all side by side to see how you want to make that offer based on what the payments would be coming out of it and the cash to close. So it's important. And this is a lot of work during the pre-approval process, but we have to set the buyers up for success. Now this, I'm telling you guys, this is the best thing since sliced bread. Make sure your customers and you are going to optoutprescreen.com so that you don't get bombarded by anyone and everyone in the financial industry and real estate industry when their credit is run. If you run your credit, Experian, Equifax, and TransUnion will sell that data as a potential real estate lead to lenders, real estate agents, insurance agents, you name it. And then that customer, once you do a hard inquiry, will get bombarded. So make sure you're doing that optoutprescreen.com. It's free and it's really, really great. So the road to success is a list of all of the things to avoid. They need to know this. They need to make sure they're understanding this up front to avoid any problems. And then my team, they need to know who's involved. Is it just Sean Woland? Is it, is he the only one working on this file? Who's going to be touching this? And what power does that give the buyer? Like, do they know that myself, my processor, and my loan officer assistant, between the 3 of us, we have 90 years of experience? That's crazy. They need to know that, like, who they're working with. It's very, very important. And the underwriting process, a lot of people are really afraid of the underwriting process. Even though they're pre-approved, they're waiting on the approval. Am I approved yet? Am I approved yet? Well, the pre-approval is just that. It's the approval. An underwriter, all they do is they're designated and they're delegated by Fannie Mae and Freddie Mac. They have their certificate stamp, their accreditation. Their job is to make sure the documentation that's in the file matches what is required by the data that's in there. They're just a validator. That's all they are. Now, if the loan officer does a terrible job at putting in the information and they get the application in and then the buyer didn't do their pre-approval properly, and now the documentation comes in and they said they made $10,000 a month and they only make $6,000, they're part-time the last 6 months, and now it goes to underwriting and then it blows up. We need to make sure we have stuff done ahead of time. That is for sure. But as long as it's done properly up front, there's nothing to be afraid of with the underwriting, because all they do is validate what's in the documentation to make sure it matches the application. That's it. Pretty simple. Platinum approval and the seller guarantee. This is another very important piece. We want to get rid of those contingencies, and then we go house hunting once all this is all done. So it's important. There's a lot that's done during the pre-approval to set somebody up for a proper offer. So if you are the realtor that likes to be very, let's just say passive with pushing the borrower to get a pre-approval, I urge you to take the next step to make sure it's done so we can do all of this up front to set you up for success. Now, the offer process, this is important. If the buyers have multiple properties, I want to send them the payments on those. I want them to understand the payment options. Then when they choose a property, I want them to understand the offers that they want to make, the different overall options they have with the offer. Like, do we offer full price with concessions, or do we offer a lower price and no concessions? What's better? Like, what's that look like? I want to run those numbers for you. I don't want that to be a guessing game. So I'm going to run that report for you. and then we can look at the different strategies on how to make that offer. I'm also going to run this, guys. If there's a property that you're going to make an offer on, I'm going to run it through our software to get an approval through underwriting so we can see if we can get an appraisal waiver. Because don't forget, guys, the new rule with appraisal waivers, they are available. They're not guaranteed. They are available now with as little as 10% down. You used to have to put 20% down in order to get an appraisal waiver on conventional loans. And remember, it's only conventional loans. But now 10% down is eligible for appraisal waivers. So we want to get that appraisal waiver before you make the offer so you can waive the appraisal on the actual offer. You can say, we don't need it. We're going to waive the appraisal contingency. And sometimes we can even go into the system and say we're going, 5 to 10,000 over asking and try to get an appraisal waiver above ask. And that way there's no issues with questioning whether or not, if you go above ask, if the property will appraise, because we don't need an appraisal. It's magic. It works very, very well. So we include that platinum approval certificate, and that gives the sellers $5,000 if the buyer doesn't perform. We pay that to the seller. It's just another concrete piece of the offer process that we can give to make the sellers happy, to make our buyers look really, really good. And we update the pre-approval, obviously, to match the offer you're making. And then when you send that offer in, you CC me so I can make that call to the listing agent and we can go over the strength of the buyer. And some of the things they'll ask is, well, does the buyer really need the concessions? I see that you marked that box. And my answer is, if the buyers chose to mark that box, they would like to have concessions. I don't give them any more information. So that's between you and the agents to negotiate. I'm just going to let them know what their desires are. So I'm going to get more information, though. A lot of times they'll tell me a lot more than they would the agent when I call. So it's kind of exciting. And again, I go over that with the agent. And then we go into contract, and then we go rock and roll. So the pre-approval process and the offer process, if your lender isn't 100% engaged in that, then you need to be. It's a game changer. It really, really is. And it makes your buyers so much more comfortable when making offers. So these are some of the tricks that I have to eliminate contingencies. HELOCs. If you have anyone that's going to be selling a home to buy another one, before you list their home, part of the conversation is you should probably get a home equity line if you have a ton of equity that you want to use for the next purchase. If you get a free home equity line, that'll give us more assets, more cash to try to eliminate contingencies with the sale. Because a lot of times if you can pull that money out for the down payment, we can count it all against and they still qualify. So setting up a home equity line when you're talking about the whole transaction of listing the property to buy another one, that could be genius. Again, you don't pay anything on a home equity line unless you use it, and they're free. So if you're going to be selling one home to buy another one and there's a contingency, you may want to talk them into getting a home equity line just to give you options. Bridge loans are expensive, but they are a fantastic tool if you're stuck in a bind where you have to sell in order to buy another one. And we actually have a loan product, guys, that it doesn't count the payment on the mortgage on their departing home when you qualify if you're buying a new home and selling the other one. All we have to prove is that it's listed for sale, and we don't count that payment against. So it is a unique product. The rates aren't exactly the same as a conventional, but it's fantastic for eliminating the need for that contingency. Mini bridge loans, that's getting a home equity line and using that as the down payment. Kind of talked about the HELOC. And then a loan recast. A lot of buyers don't understand how this works. So a lot of times buyers have 5%. And even though they want to sell their home, take all of that big chunk to put towards the new one. If we do 5% down now without selling, qualify with the 5% down, and then they sell this house over here and they get a paycheck, proceeds of $400,000, they can take that $400,000, put it towards the new mortgage that's quite high because they only did 5% down, and re-amortize that payment and recalculate it with a loan recast. So this will help figure out how to eliminate contingencies when making offers. Making sure they understand that is an option is critical. Appraisal waivers, we talked about that. And contingency on financing, that's the platinum approval. We'll get it fully approved through underwriting, so you can waive the financing contingencies. You can waive all waiting periods. You can let the earnest money go hard immediately. You can waive appraisals, and you can have a seller guarantee, and you can make it just the fastest close ever in 2 weeks. So the proper pre-approval, I'm telling you guys, it's so important to get that section of that completed right. I can't tell you how many times on the weekends I have, hey, I was working with the borrower. They found a home. They weren't, expecting to find it so quickly. We need to get a pre-approval to make an offer. That happens all the time. If there's a buyer interested in doing anything in real estate, even if it's 6 months down the road, almost 80% of those people, that's total stat I made up on the spot, but they're going to start looking immediately, and they will find something. And then it's going to be a rat race to try to get it done really quickly. So I urge you, if you're working with anyone up front, it doesn't hurt their credit. It's a soft credit pull. So there's no impact on their credit at all. There's no commitment. There's no cost. And we pour them ourselves into these buyers to make sure they're properly prepared. So I urge you, if you're the kind of realtor that kind of tiptoes around the pre-approval because you don't want to push them away or strong on them, and be too forceful with your buyers because they'll go to a different agent maybe. I know that happens. I know that's in the mentality of some people. I urge you to make sure they understand the power behind getting and committing to a lender upfront. And that's it. That's the $5,000 guarantee we give to the sellers. And I'm going to open this up for any questions that you guys might have. But this week is going to be a really interesting week with the inflation coming out and with what the feds say. So the week before everyone goes on vacation is this week. So it's going to be a busy week. And because everyone's going to want to get everything done this week. So buckle up. And if you have any questions, I am here to answer them. I think you got a new, oh, that's an old one. All right. You're very welcome, guys. Thank you so much for everything, and enjoy your week. And I'm glad I'm feeling better. My immune system has not been the same since I had surgery, but it is coming around. So thank you for your patience as I was out early last week. But enjoy your week, guys. Have a great day, and I will talk to you soon.
Thank you, Sean.
You're very welcome.